Definitely took a little break for about a month. And right now, one of the things we really want to talk about is the GDP number that just came out. It's a 4% annual rate, they're saying. More than 4% annual rate that was, we saw growth last quarter. What is your perspective on this, David? Is this, does this actually reflect where the economy is right now?
Not a chance. The GDP number is probably, aside from inflation and employment, is probably the most manipulated economic report that the government puts out, and it's for political purposes because now Trump can go and do his end zone dances, his celebrations, and say what a great job his economic policies are doing. I mean, if anything is, if you look at the trade war, it's probably caused economic growth to somewhat contract. But if you look at where they're attributing the sources of growth in Q2 to, the first part is a quarter of that growth came from a one-time boost in soybean exports to China before the tariffs went into effect and the trade war sort of really hit. So that's a one-time effect that is, would pull those sales forward into Q2 from future quarters. So, that'll be a source of decline going forward. But then they're attributing a massive increase in growth to personal spending, consumer spending in Q2. And I'm just not seeing that in any of the supporting numbers. Retail sales, home sales, furniture sales, auto sales. If anything, I would say that consumer spending, if you strip out the effect of inflation, probably contracted in Q2. So in my mind, the GDP number just has zero credibility. Oh, one more thing. They also, the GDP deflator number that they use, they took it from 2.2% in Q1 to 2% in Q2. Now, I don't know anyone who would say that inflation declined in Q2. If anything, based on the CPI reports and the PPI reports, inflation accelerated in Q2. So the effect of the deflator, when the deflator is lower than it should be, it makes the GDP number look higher than it should be. So if they had used a realistic GDP deflator number, I would suggest that it probably would show that economic activity at best was flat in Q2 and probably contracted. So, I mean, there's not one shred of believability in that GDP number.
And just to speculate a little further on it, I mean, when do you see the truth of this GDP number coming to, fruition? Do you see Q3 or Q4 all of a sudden being a lot lower than this, and Trump lashing out, and who will he lash out against? I mean, these are all questions that I imagine will be answered fairly soon, but maybe you can speculate on it.
Again, that's a really good question. I actually believe that we're in a period of time now where the government's just throwing out propaganda out there, kind of in the way that the writers like George Orwell forecasted would happen eventually. I mean, if you say a lie enough times, people come to believe it. And you're seeing deterioration in the middle class. So, I mean, they can tell us in the headlines and on the surface everything's great, but underneath there's a decay and a collapse going on. And I don't know that they'll ever report the numbers truthfully. I mean,
and just to follow up on that, I mean, reading your blog, you had an inside view from just some guy, I think, who's a follower of your work, who wrote about his situation, in eastern side of America. He has a few businesses, and he's just talking about how his average consumers they're not there. They're not coming in. They're full of debt. I mean, they basically are the only way they have any ability to consume is by maybe getting a larger credit reserve on their credit card, and then coming out and then spending it. So I definitely agree with what you're saying.
Yeah, that's right. I mean, the average household is just getting crushed under the weight of debt. And from 2009 to now, they've managed to keep the economic gerbil on the gerbil wheel by issuing more and more debt. And now you've got every level of this system has a record level of debt. And, mathematically, that just can't continue forever. So they've either got to let the whole thing collapse, or we could at some point, go into Weimar Republic style hyperinflation of the currency, because that would be the only way to keep it from collapsing on the surface, even though beneath that, everyone's economic and financial situation would continue to deteriorate, and we'd go into hyperinflation.
What is your perspective on the real estate market? Because you recently put out a piece saying that you think the bubble is bursting and home builder stocks are in a bear market. What is your perspective on the state of the real estate market?
The housing market is starting to, we're starting to see the housing bubble that was fomented when, by the Fed dumping $2.5 trillion into the housing market. And because that was the QE. Half went to purchase government bonds, half went to purchase mortgages. And the Fed obviously has stopped. Well, they're still buying mortgage securities, but it's, the effect of the QE is worn off, and the leading indicator are the housing market stock or the home builder stocks. And I find it quite amusing, because usually if the general market goes down a certain percent, all of a sudden it's in correction mode or bear market mode. Well, I haven't heard any of the financial media outlets discuss the home builder stocks being in bear market mode, but the home builder stock index I follow, the Dow Jones Home Construction Index, that's down over 20% since the end of January. And some of the individual stocks are down well more than 30%, and they have a lot more to go. Now, when the first bubble burst, the housing stocks peaked in July of 2005, and the Dow Jones Home Construction Index went from like 1,100 eventually down to 150. So the Dow Jones Home Construction peaked a little bit over 1,000. It's currently at, I believe, it's 774 right now, and I think we could easily see 150 on it again. And that's your leading indicator of where the housing market's going. Housing starts have declined now 3 months in a row, and that undermines this narrative that there's tight inventory, because if there was tight inventory, home builders housing starts would be going through the roof. Home prices are starting to fall. I'm seeing that in a lot of markets. I'm especially seeing it in Denver, which is typically a bellwether economic state. It was one of the leading states to pop first in the mid 2000s bubble. Same thing with Southern California, New York City. And then one of my subscribers showed me an email that Pulte Home sent around to realtors in northern Florida, and I'm sure it's not the only market where they've sent this around, where they're offering realtors up to a $20,000 incentive bonus to sell their homes. You don't do that if the housing market's strong. That's essentially telling you that the supply of their homes exceeds demand. And it's the housing market, the decline in this cycle for the housing market is just getting started, and at some point it's going to start to snowball.
And we had discussions last week about a bearish article on Wall Street Journal talking about 2 out of 5 homes are owned by baby boomers, and demographically, you're talking about the next 10 to 20 years, they're going to have to sell that at some point. And who the hell is going to buy all this with debt levels where they are today? It just doesn't make much sense.
Yeah, that's certainly one of the components that's going to undermine the housing market without a doubt.
You wrote recently, and I was kind of in agreement with the article you wrote about obviously gold and silver prices have been in the tank for the last, I don't know, year or so. They've been going downward. You see gold's kind of trading right now like it did before the crash in 2008. I wanted to get maybe some of your real-time thoughts on that.
Wait, you were only in kind of agreement?
I think there's a lot of people out there hoping so. I mean, there's a lot of people out there who want to buy it on the cheap. So there's a lot of bears out there really, really salivating at the moment.
Well, what you just said right there, the fact that there's a lot of bears in the precious metal sector, extreme bearishness has always been a contrarian indicator. Now, that doesn't mean we're going to have a V bounce in the sector. I mean, certainly there's official forces that are working overtime to try and keep a lid on the price of gold and silver for obvious reasons. But I was actually exchanging emails with a longtime friend and colleague yesterday who was like really worried about what the Huey chart looked like and the technicals and the sentiment, et cetera. And just to put what's happened since December 2015 in perspective, if you look at the Huey index or the GDX, they're both still up 66% from their bottoms. I think the Huey bottomed in December 2015, and then the GDX bottomed in January 2016. So they're both up 66%. So I realize it's not Amazon or Netflix, but if you just invested in the GDX, in January 2016, and you're up 66%, in the olden days, 66% over 2.5 years used to be considered a phenomenal rate of return. So, and gold is up, just call it, without running the exact numbers, it's up 20% from where it bottomed in December. And silver's got to be up like 25% from its bottom. Again, that's just off the top of my head. They're not exact numbers. So, we've had a sharp sell-off. The sentiment is as bad as I've ever seen it. But on the other hand, you're supposed to buy when everyone else wants to sell.
Right.
If you believe in the sector. And the truth is, every day that they try to keep a lid on the sector, the pressure builds for an upside explosion or an upside move. And the fundamentals that support another large move in the sector just get stronger every day. And just to get back to the point about 2008, I mean, just everything about the way the sector's trading reminds me of the way that it traded in 2008. And there was a really ugly sell-off from March through October that year. And the funny thing about that is, with what was going on in the financial and economic system, you would have thought that gold and silver should have been going through the roof. So they were behaving counterintuitive to what they should have been doing. And I do believe that again, I don't have no idea on the timing of this, but I think we're going to have an event like we had in 2008 that happens in the financial and economic system, only I think it's going to be a lot more severe. So, and I'm not the only one. This isn't necessarily my original thinking. So you would think that at some point gold and silver would be going higher.
Most likely after they come in and do some new policy where maybe it's a QE4 or something along that line. I would imagine by that time the confidence will shake so hard that people will run for the safest havens.
Absolutely. And I don't know how long it'll take for the Fed to come around to that conclusion. They could make things a lot worse in the economic system. I mean, they've already made things as bad as you would think they possibly could have, but they're raising rates now, sort of, and they're tightening money supply, sort of, at a time when 40 years ago, what would have made sense would be to lower rates and ease up on monetary policy.
Do you think that, because you were saying, gold, the trading action right now looks like right before the crash of 2008, when we saw that really bearish time for the gold market, do you see that gold could fall below $1,000?
I don't personally don't think it can. I mean, I think there's a good chance that the 1215 print we hit, I think it was last week on the futures, may have been the bottom. But again, who knows? I mean, most of the downward action is occurring in the paper markets of New York and London. I mean, if you look at overnight charts, usually, not every night, but usually gold and silver tend to move higher when India and China are actively trading. And then after the AM London fix, the price of gold will get hit. And so I think what you've got going on right now is you've got a bifurcated market. You got the Eastern Hemisphere that continues to load up on physical gold and physical gold that has to be delivered. And then you get the price takedowns when the paper markets are open. So I don't know how long they can keep this charade up. I mean, again, given that it's paper gold, futures and forwards, they can print up a lot of paper and offer it out into the market. But, at some point they're going to get called on the underlying physical to be delivered. And, they have to balance that out. And so, again, I think it was easier for them to push gold and silver lower in 2008 because you didn't have the enormous presence of China. I mean, China was buying back then, but not to the degree that they're buying now. And also Russia wasn't buying to the degree they're buying now. And Turkey, they imported over 300 tons last year, and they're on track to import at a record pace this year in 2018. So you've got other countries who have also joined the physical gold buying party. And I think that's going to put a natural floor under the market. And I think that natural floor is well above 1,000.
Yeah, and just to add in a couple points, at least on the retail wholesale front here in the United States, obviously in the last couple of years, with the prices kind of dropping a little bit or staying at 1050, or a lot of wheat cans have sold back, compressing profit margins on retail bullion. Retail bullion premiums are at, I think, the lowest level since 2008, ever since I've been in this industry. So the question is, when does that finally turn around? And if the spot prices keep falling towards, say, the December 2015 lows, my expectation is that you're going to get real tightness again, because you're just going to have bargain hunters coming in buying heavy doses. So you'll see supplies, I think, kind of dry up and premiums will start to shift back up. So it's just something for the viewers out there to keep in mind. Trying catching knives can be difficult sometimes. And then also just keep your eye on the premium charts for products, because that will tell you a lot about the Western side of the world, how aggressive they're being in buying physical bullion. And just to remind, December of 2015 was the largest amount of gold that China ever bought. When you look at charts, they went, that was the most gold they ever bought as far as tonnage. So if we do get spot price downward pressure, you can expect that China will repeat exactly what they did in 2015, putting further pressure on the system, I imagine.
China's on track right now to import the second most amount of gold on record, next to 2015. Mm-hmm. So, I agree with you in terms of watching the Western markets, in the sense that monitoring the premiums, especially on Silver Eagles, has always been, a good way to gauge what's going on in the market. I remember back in the summer of 2008, the premiums on Silver Eagles got to be as high as like 50%. An $8 Silver Eagle would cost you $12. Mm-hmm. So certainly at the margin, the Western retail coin buyer is a good bellwether indicator. However, in terms of like what's going on in the sort of institutional or sovereign bullion markets, I mean, if you look at the lease rates in London, gold lease rates the curve is inverted and lease rates are negative, and that's always indicated extreme tightness in the physical market. And I exchanged emails with James Turk about a week ago to discuss that with him, and he said, it's the same thing in the forward market. There's inversion going on, and everything that he looks at in London indicates that there's tightness there. So I think we're already seeing tightness in the bullion market, and that's why I'm not sure we'll go. We might go below 1,200 briefly, but I don't know that it'll stay below 1,200 if in fact it even gets that low. Especially now that the further into the end of the summer we get, the closer we get to India's really large buying season, and that right there will put a floor underneath the price.
All right. Well, David Kranzler, before we let you go, I wanted to touch on one last subject. Trump just actually recently, kind of getting back to the economy, coming full circle here. Trump was making some comments about the Federal Reserve, actually, and saying, he wasn't happy about the Fed's raising interest rates. And so this is kind of unprecedented for a president to make comments like this. Normally the president doesn't comment on the Fed, but, nothing's normal for this president. So what is your perspective about Trump making comments regarding Fed policy?
I think you summarized it perfectly. Nothing's normal about this president. If you consider where Trump's coming from, he's never seen a loan that he doesn't like as long as the interest rate's low enough. So, Trump's whole empire is built on debt, and debt is enabled by low interest rates. So, he's coming from a perspective that, an interest rate above zero is too high. So, it's interesting, though, if you think about the context in which he said that. On one hand, he's saying the economy's doing, quote unquote, terrific. There's a tight labor market. But on the other hand, he's begging for lower interest rates. Now, if the economy's doing so well, why would he want lower interest rates? If anything, clearly we're starting to see inflation even slip into the highly manipulated government numbers. So by that measure, the Fed should be increasing the rate at which it's increasing interest rates to head off inflation. And on the other hand, he's saying we have a tight labor market. Well, the last several, midday speeches he's been giving is kind of focused on things that can be done to improve employment opportunities. If there's a tight labor market, why is he worried about, job availability? So everything he's doing is unprecedented, and most of it doesn't make sense.
All right. Well, David Kranzler, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you?
Sure. My website is investmentresearchdynamics.com. And on the front page there, you can find links to my mining stock journal and my short sellers journal. So, my subscribers and I have been just killing it shorting the home builders, and I discuss those every week. And I've also started talking about various ways to express a short view on Tesla. So there'll be more of that this Sunday in the next issue of the Short Sellers Journal.
Yeah, we'll have to get into that subject next time because that one is fascinating for anybody who's been watching.
I'd love to discuss it.
Yeah, that'd be fun.